Hey everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in today. We're going to talk today about the cash flow statement. Now, we did a concept brief on the balance sheet. We did one on the income statement. And the cash flow statement is the third out of the three important financial statements that we use. The cash flow statement is just what it sounds to be, and that is it conveys information about the change in cash balance from one period to the next. And the cash flow statement breaks down cash receipts and disbursements in three categories. One is operating cash flow. So these are the cash flows that are derived from receiving payment from customers and cash payments to suppliers and employees, and all the cash receipts and disbursements used in actual operating the business. And then we have another category that's cash receipts and disbursements from financing activities. So for example, if we take out a loan, that receipt of cash goes under that section. Likewise, when we pay back borrowed money, maybe it's an equipment loan or something like that, it's going to go in that section. So that's the financing cash flows. And then we have another section that's investing cash flows. Investing cash flows are really the purchase of long-term assets, fixed assets for the business. And likewise, if we buy financial securities, or if we invest in other companies or acquire other companies in whole or in part, it's going to go into that investing cash flow section. That is usually a use of cash rather than a source, but it can be a source as well if we sell off long-term assets or investments. Out of those three categories, by far the most important, and this is the real kind of mother's milk of any business, and that's operating cash flow. We need sustainable operating cash flow in the business in order to exist as an ongoing enterprise. So when companies get in trouble, when they can't service their debts and so forth, it's almost always the result of insufficient operating income. So that's the real, if you had to pin down one of the most important metric in a business, it's probably going to be operating cash flow period over period. You can have periods where you generate a loss, but over time, that operating cash flow has to be positive, and hopefully it's significant. So this is really the most important thing in a business. It's understanding the information that's conveyed in that cash flow statement. We use a lot of information from the other financial statements as well, but especially if you're buying a company and you're going into debt, you really need to know how cash flows in and out of your business. So that's all we'll talk about today. I appreciate everyone for tuning in. We look forward to seeing you next time.